welcome to the TMT Stock Market Strategy video for Thursday, February 18th. Well, the rally continues off the lows that was sparked by the OPEC announcement saying that they were going to start thinking about cutting production. And then we get Russia and OPEC saying that they will freeze production for the moment. So that kind of added more fuel to the fire. And then the short started to scramble. So we have 4 days up, and I want to show you the McClellan oscillator here. We are not oversold as of yet. I'm sorry, overbought, apologize. We're not overbought as of yet. We still have a little bit ways to go. So I want to see we get this spike out, just like we did here, out of the Bollinger Band and then roll back in again. So at the moment, we are still not as overbought as I would like it to be. And then I like to start looking for some good short entries. Remember, we mentioned, I'm going to emphasize a little bit more on the spiders today. There's a lot of longs trapped up at the 2000, 1950, 2000 area, where I think that when we get closer to that number, I think you're going to see some selling, or at least some take profits off of from the lows. All right, so now let's take a look at the weekly chart of the spiders. I've showed this to you many times. This held, but if you could see, the weekly charts point a different picture than the daily charts. Lower highs, lower lows, as you can see here, not looking too good. We did manage to hold this area here, but if we lose this area, I mentioned 170, 160 is going to be the next target, next downside target, if we do lose this area. It's a critical juncture right now where the S&P is at right at the moment. So at the lows, 180, 181, if we lose that area, I think all bets are off. And here's that 20-week moving average and a 50-week moving average on top of it. So we're still pointing lower. The weekly charts doesn't look as pretty as the daily charts, but I want to show that to you now. You could see here we had 4 days up of gap, continually gap up. Now we're back into that resistance area, 193.50. We had our support hold resistance here, broke out yesterday, and now this is going to act as support to 187. You could see here in the spiders as well, our downtrend line still holding true though. We could see that we ever so slightly we broke out, but same thing here, lower lows and lower highs, and we did break out here. So again, we're looking for that big picture. And if the market does have legs, it should hold this downtrend line and then move back up again. That is still time will tell. But this is a big stretch, guys. We're into the 50-day moving average. I'm going to see right up in here that 200, which is 2,000 in the S&P, and then maybe that 1950-ish area, 195 would be the spiders that we see a little bit of a failure in here. And then if we get the trigger back up and then fail, we would revert back down again. Now, if we do break down, we have some support here. As you can see, this is going to be support 187. And let's see if we make a higher low from this previous lows. If that does happen, then I think we're going to have some fuel to get back up about these levels, okay? But remember that the spiders here, a lot of longs are trapped here. A lot of longs are trapped. So until we flush, which we did not get a scary flush, and I mentioned that to you before, you got to be careful here, okay? Now, I wanted to show you the 60-minute, which we're extremely grossly overbought, and the RSI and our MACD, and you can see we're coming into some heavy resistance area. Look at the supply up in here. You see that? Thin zone, we came in and we tagged it once, we tagged it twice. This is a big area here. Look at that. Failed, and now we're coming up here and failing again. So I would treat this as suspect, but I would not get in front of a freight train at the moment. Stick to the trend for the day. The trend will be your friend for that day, remember. Okay, so now look at this area here. You could see way up above. If we break this area, right, this area here, we're going to have a thin zone that we can flush right back up to this area. You can see this thin zone here, right? We have this little area, that thin zone you could see here. We got lots of gaps to be filled, so keep that in mind, okay? But 60-minute chart here, again, overbought, coming into a heavy band of resistance. So before you start looking to buy, thinking that the market is ready to rally up, think again. Just be careful here. Use caution, okay? All right, diamonds, you can see here, 4 days up, coming into the 50-day moving average and at the upper end of the Bollinger Band. So, and we have resistance here at 165. That's starting to coincide nicely with our spider 60-minute, all right? IWM, our secondary leader, again, up 4 days in a row, not even close to the 50-day, just got above the 20. So again, still rather weak here, our secondary leader in the diamonds, in the IWMs. And lastly is the Qs. You could see up in here, resistance 102.70, 50-day moving average comes in at 104. And you can see here, I mean, you could clearly see momentum is still not great here. RSI still lower lows and lower highs. Can't even break out of this downtrend line here. So again, guys, treat this as suspect. I'm not telling you not to take long trades. Definitely trade in the trend, because if you were looking to fade any type of rally here, you would be losing a lot of money the last 4 days. Okay, and that's what what we kind of teach at Trading Market Technicals. We want to make sure that you stick to the trend. Pick the trend of the day. That's 50% right off the bat, and now you manage the other 50% by managing your entries and exits. Okay. Hope it helps everybody. We'll speak to you tomorrow. Take care.